broadcast is now starting. All attendees are in listen-only mode.
All right, good afternoon, everyone. My name is Bobby Rains. I'm here for our regular Investors Observer members-only workshop. Just going to look at our agenda for today. We'll talk a little bit about what's going on in Investors Observer, have a little market update, and then the rest is member-driven content, questions, site demonstrations, all kinds of stuff like that. As always, if you send in questions ahead of time, I can prepare for questions a little bit better. We got a ton of questions today. I thank you all. Thanks to everybody who sent one in. If I didn't get your question into a slide, it's just because it seemed like something that would probably work better if I just followed up one-on-one, but you can expect me to reply to that. All right, so let's see here. Oh, all right, that animated funny. All right, what's going on in Investors Observer? We recently added the Biotech and Pharma tab to the news page. Let me pull that up real quick here. That looks like this right here. So this will be your drug updates, FDA approvals, things like that will show up here. Something tons of people are interested in. We get a lot of questions about it, so we wanted to put that on the news homepage. All right. The other thing that we are working on is some changes to how the watch lists work. We get a ton of questions about this, so we're going to make it so you can see all of your watch list in the screener. Should make it easier to edit watch lists, or we're also going to make it easier to edit watch lists and some things like that. So that's coming. It should be very soon. We didn't get it ready for this workshop in particular, but look for an email like we do with all of our update and product announcements. We'll send you an email when it's out there, and it should be coming fairly soon. All right, so on to the market update. So this is the last year of S&P 500 in daily candles. Finished off 2020 pretty solidly in green territory. We're still, everything's moving up. The 200-day moving average has really started to kick up here now that we're way past some of this, which helps close the gap here a little bit that some people worry about. The 200-day is actually moving up faster than the market, so when this price gets too far above the 200-day moving average, people start to worry about it, but that gap seems to be closing up some, so that's nice. All right, so this is the S&P 500 versus the S&P 500 equal weight. The equal weight's in blue here. I think that's interesting here is you can see that so November is here. You can see the equal weight has really outperformed since the election. That may not be entirely election related, but I think, most of you, if you follow the stock market, know that a lot of the big tech and some of the other things that sort of led the market higher, for most of the 2020 recovery sort of have lagged recently, and other stuff has been rising today. Some of that's, positive news about vaccine. We're all going to get out of our houses eventually. Things will reopen, stuff like that. And so those stocks that have lagged are starting to catch up, whereas I think people are starting to take a look at some of the, the big tech stocks that just went up and up and up all through the summer and fall and been like, hey, these are starting to look kind of pricey. So I think that's what's going on there. All right, so what else is happening? We're still in a very virus-driven economy. Cases are rising again. We may see some slowing in that as holiday travel ends and people, sort of sit closer to home and start to sort of return to their routines. The vaccine does provide a light at the end of the tunnel. The new strain of virus that is said to be considerably more contagious is concerning. Indications are that the current vaccines will still work, which is a positive. I'm not entirely unqualified to speak about it past that. What it could mean, though, is in addition to a higher number of cases sooner, that you may need a higher number of people to get vaccinated before you start really slowing the slowing the spread. And then, yeah, on the economic stimulus front, it does seem that the Democrats won both seats, both of Georgia's Senate seats, which were up for runoff elections yesterday, which likely means more economic support is coming. That gives the Senate a 50-50 tie where the vice president can break ties. So that that likely will help the market, and again, that probably gooses things in the sort of the cyclicals, things that haven't been winning all year. All right, so some of the other economic data. This state's JP Morgan consumer spending tracker. I mean, it was always a little bit noisy in terms of, this just compares spending versus the same day the previous year. But it got super noisy around the holidays, and that is, in part at least due to holiday shopping. People shop different days and things like that. All right, so this is actually interesting. Chase actually indexed the holiday shopping season to Black Friday. So this takes out some of that year-over-year noise, and you can see things line up a lot better here. The big headline from this is a 5.7% year-over-year decline in holiday spending, which is not surprising given much higher unemployment, people being home, holiday parties and things like that didn't happen. So yeah, there's that. And then from the TSA, this is travelers. So the blue line's here, traveler screen per day, and the red line is a rolling 7-day average. You can see we had this, spike around Thanksgiving, and then it went back down, and then it went back up again, and I expect it to go back down as everybody sort of filters home from the as everybody sort of moves home from that, travels homeward for the holidays. There's still not a lot of business travel and other things like that happening. So I would expect this to sort of go down from here and return to sort of this general trend that we saw from sort of July onward. All right, so yeah, that's the sort of economic recap as I was able to put together today. So on to the questions. Let's see here. I see a couple questions coming in already. As always, just throw questions in the box when you have them. I can either, get to it as it comes in, or get to it at the end. But if you have a question on something that I happen to be talking about, by all means, there's no need to save it to the end. All right, so this question came in from David. He said he bought 100 shares of IIPR at 155 and sold a January 170 call for 250. Today the stock's around 181 and the call is at 1250. What is the correct way to address this trade and get the max results from it? All right, so the first thing to do here is do a little bit of math. Okay, so the stock is at 181. And your call has a 170 strike. That means your call is $11 in the money. So that means that $11 of this $12.50 price is what's called intrinsic value. The remaining 150 is extrinsic value. That's the time value, whatever else you want to call it, that remains in the option. So when you sold the option, it was out of the money. So you got $250 for that. So now you're down, well, you're not down. You're up $1 in terms of the call in absolute terms. And so if you buy back the call, what essentially happens is you're moving money from cash to the IIPR position. Okay, so right now your position is worth $170 because any value in the stock above 170 is going to be erased by the extrinsic value of the call, which you're short, right? So you have to buy the call back for $12.50. The position is actually probably worth less than 170 today because there is that $1.50. So we'll call it, would that be 168.50? But we'll call it 170. If you hold this through expiration, you get 170 against a cost basis of 155. So if you buy back the call, essentially what you're doing is you're taking cash and applying it to the IIPR position. Your cost basis is no longer 155. It's going to be, given these prices, 166, which is just the 155 plus the $11 in extrinsic value you had to buy back in that call. Or intrinsic value. If you buy back extrinsic value, that also goes against your cost basis. So the thing here is, you say, wow, hey, that was great. I made a ton of money in a pretty short amount of time. Let the call be assigned. Don't worry about the dollars between 170 and 181 and look for another good trade, or do you want to keep holding the stock for some reason? There's tax reasons for that, which I can't and won't get into. But just in terms of, do you want to hold the stock? In general, I don't think, with the exception of, maybe selling some things around the end of the year, deciding when you want to close a trade, for long-term capital gains versus short-term capital gains. Those are things where it may make sense to think about something for tax purposes. But if you bought the stock for a little over a month ago, you're not anywhere near that window, so it's not really relevant. So yeah, do you want to keep holding it? Do you think it's going to go up even more? If you do, then maybe cutting or adding 11 or 12 bucks to your cost basis isn't that big a deal. If not, then the covered call can sort of apply some discipline in terms of a thing that a lot of people have problems with is taking profits. Now, obviously, you're losing, right? It went to 181 instead of 170, so you're not getting a ton of the you're not getting a ton of that gain there, but you're getting a big chunk of it. And so do you expect it to make another run like that? Like what's your goal here? If you think you can make more money on something else, then you should do that. If you're holding the stock for some other reason, then that's also fine. But that's the thing I feel like you have to ask yourself. Hang on just a second. All right, so we got this question from JB, who said he's a brand new premium member. Is very impressed and overwhelmed with the tools we have. But generally he wants to know what sequence to use the tools to find the best and most timely investments in a typical trading day. Tools are great, but lack the timing element. So we don't update things during the day. So really the issue there is about, when the price gets updated during the day, but the, the scores and things like that don't get updated during the day. And so really it's, it's not about day trading, right? Like our site isn't for day traders. So that's not really a thing to concern yourself with, right? Like if you're not trading on that time horizon, then that's not that big a deal. So then what you're left with is, how to use our tools really depends on what you're trying to do. If you have a sort of style of thing that, right, if you know what kind of investor you are and you know how you like to invest, then, we have some tools that can kind of help you with that and some things to help you get acclimated to, to the site to help you get up to speed here. So, if you're, some kind of a value investor or you like dividends, we have pre-built screeners here, right? You can come to the stock dashboard and hit that deep value screen. And then you can see what we did here to find these deep value stocks. And then you can make changes from here if you want, to make this fit your criteria better. If you're a momentum investor, we have, the big momentum category here. So you can come and look at these and see what we did, see how we figured it out, and then add criteria from here if you want, or, change the criteria. So that's one good way to look for things, is to just, come and use the kind of shortcuts that we have already. Another thing you can consider is, if you're trying to run a diversified portfolio or trying to figure out what's hot right now, you can come and look at the sector and industry pages, right? So if you're concerned about the fundamentals, you can look at, say, okay, well, so healthcare is the sector where the average stock has the highest fundamentals, or at the industry level, it's drug manufacturers. And so you can look at it that way, right? Analyst rankings. What do analysts like right now? Healthcare, technology, basic materials are the tops on the sector level. Conglomerates, real estate, healthcare plans are the top there. And so here you can drill down further, right? You can go to conglomerates and see, like what are the top conglomerates? And then you can go through even further to see it all, right? Get to the stock screener just filtered on conglomerates. Or you can go through the sector level and say, all right, I want to see healthcare. And then, so here's the top healthcare stocks, and here's where we're at in terms of what are the top, what's the top industry in healthcare? It's healthcare plans. Okay. So now I can see, all right, what are the top healthcare plan stocks, based on this metric? And you can do that for any of the metrics, or you can drill in starting with one metric and then go to another. It really depends on what it is you're trying to accomplish. As far as what's the best order to use the tools, it really depends on what it is you're trying to do. But that stocks dashboard is a good place to start. We have those predefined screens there, so sort of the one that seems like it's the closest to what your strategy is probably a good place to start, and then you can make adjustments to what we've sort of put in front of you there. All right, so Nikki had a couple of questions, and I sort of chopped this down and combined it into just sort of this. So green energy companies, many of them have very small market cap. Can that be risky? So yeah, small cap companies can provide big opportunities, but you have to be careful. A lot of small cap companies, especially right when you start talking about things like green energy, can be very speculative. You can have some big wins, you can have some big losses, right? They're small companies. So by definition, right, you don't have the sort of economic moat of like a Microsoft or an Apple or something like that, right? And especially with these sort of speculative things, they can fall out of favor a lot faster than some big things, right? Like oil stocks haven't done great over the last several years, but it's been a long, slow slide and you're collecting a dividend, as opposed to some of the pot stocks that ran up super high and then disappeared, or some of those other things. Some of the smaller fracking players got really smacked around, whereas the bigger ones, they have some economic moat and they can stay in business longer. And so that's true of any industry, right? Like the small cap companies can provide big opportunities, but you have to be careful, especially when you get to things like green energy companies. I'm not going to call green energy investing a fad, right? Like solar energy has been around for a while. The cost has come down. Those things are great. But when something starts to get really trendy in the market, that's when you really have to be careful. Okay, so we've seen it just this year also with not just green energy, but generally electric vehicles. And in the past couple of years, pot stocks have come up. There were a whole bunch of companies that were going to change, start doing something with blockchain technology. I think the most famous example is Long Blockchain, or Long Island Blockchain is what the company is now. It was an iced tea company, and they changed their name to Long Blockchain. And the stock went nuts, but they had no experience in blockchain. They didn't know what they were doing. And so, yeah, a few investors made a lot of money, and a lot of investors lost money. So what you want to do in this case is you really need to make sure it's a legitimate business, right? So like look for things like, oh, has this company changed its name recently? Does it have a long trading history, right? So if you see a stock that's been a penny stock that's just sort of bumped along between a nickel and a dime for a long time, and then they changed their name and now it's a $3 stock, that's the kind of thing you want to look at, right? There might be something funny going on there. And then look at the news about the company, right? Like, is the news about like pivoting to this exciting new line of business and things like that? Or is it like, oh, well, this company has been in this industry for a long time since it was started, and now they're doing this. or and they've been doing this the whole time, and now this is a hot thing, and the stock is taking off. Those are very different in terms of how you evaluate them and what you want to do there. And then like just the presence of news at all about a company, our analysts following the stock, things like that are important to consider, especially with the small caps, and especially when you get into the sort of the what's hot right now in the stock market kinds of things. That's where you can unfortunately the way it works is when there's a lot of money, you get a lot of good money, and then a lot of bad actors come in and try to suck some of that up. All right, so James said, I'd really like to make use of the daily options trades. Can we briefly demonstrate how to make an option trade on IG.com? So I've never, I hadn't actually heard of IG.com prior to receiving this email. I can't provide this kind of demonstration. I can't tell you how many brokerages have started just this year, or well, not 2020 or not 2021, but in 2020, a ton of new brokerages have come online, and I can't keep track of, I used to try to create dummy accounts, and, they used to let you didn't have to fund the account. You could just start it and you could go in and look at the tools. But I can't keep up at this point. So what instead I can offer is a couple of things. First, a few points about choosing a broker. I don't know anything about EIG.com. I'm not going to say anything bad about them, but we get a lot of people who ask, do we recommend a broker? And we don't. But here's what we recommend in terms of what to look for if you're trying to choose a broker. Good educational materials and support will show that the company is serious about helping investors. Like I was just saying about the small caps, and when there's a lot of money, shady actors start to come in. When you have a lot of people creating investment accounts, like we saw this year, you have a lot of people creating investment firms. And the ones that care about being in the business for long term, they care about you, the customer, making money, right? Because if I sign up for an investment account and I make a bunch of trades and I go broke, well, the broker made some money on all the trades I made, but now I'm broke and I'm not making any more trades and I'm not a customer anymore. Okay, that's a short-term play. A good brokerage firm will have educational materials and support to help you make these trades, right? So I get a lot of questions about, I don't know how to do this from customers of a lot of these new smaller brokerages. Whereas the big guys, I get way fewer of these questions because they have educational resources on their websites. And so, things like if you can't call and get a person on the phone, that's maybe not for you, especially if you're a new investor and you don't really know exactly what you're doing. I'm not saying you need to call and make trades over the phone, but if you can't get somebody to tell you like, oh, hey, this is here, right? Like basic questions about the website, that's maybe a sign that that's not the place for you. And as far as how to place a trade, all of our trades right now, except for the short puts or buying and selling a stock, are spreads. So all of our option stuff is spreads. So you want to do that on a spread ticket. So typically in the options section, there'll be something called spread or multi-leg order ticket or combined order ticket. And some of them even have the kinds of trades, right? So like the daily investors keyhole trades, those are vertical spreads. They also are in a category of credit spreads, whereas the diagonal spreads are debit spreads. Covered calls, usually has their own ticket. It's also sometimes called a buy right. And so you can go from there. And the reason to do this is you want to place both legs at the same time for a net price, right? The prices are moving all the time. If we say, hey, do this thing and this thing for this price, then you want to do this thing and that thing for that price. You don't want to do a thing and then try to do another thing. And somewhere in the course of negotiating two transactions, come out with the price that we gave you. That's really hard and you can get burned that way. It makes way more sense to just put it on the spread ticket and you either get it at our price or better, or you don't get it at all. So that's the way to handle that. All right, so then we got these questions. I forget, I didn't put the name on the first one. I didn't put the name on the second one either. Some nice person sent us a whole series of questions, so I cut it up into 2 slides. So the first question was, there's been some insider selling at Stitch Fix, but many still consider it, at the beginning of a bright future and cheap to pick up. How is insider selling not necessarily a negative impact on the stock? So some insider selling is fine. The thing about insider selling is insiders frequently get paid in stock. And so it's pretty normal for them to sell some of that stock from time to time, right? I mean, if you paid somebody a bunch of money a year, you really have no place to criticize if they go and spend that money, right? That just makes sense. And so some insider selling is fine. Now, if there's a lot of insider selling, and a lot is really what you're looking for, there's a sudden change, right? So if there had been not a lot of insider selling, a few sales here and there, normally on kind of a schedule, that's pretty normal. And all of a sudden you see a whole bunch of people dumping a lot of shares, that can be alarming. But some insider selling is fine and normal and to be expected, because the people that get paid in stock have a right to sell the stock that they get paid, right? Like that's how they spend their compensation, is they sell that stock and then they get cash. And the reason those guys get paid in stock is it aligns their interests with yours. There's a lot of times some limitations on how much stock they can sell and how soon. But yeah, it's pretty normal for them to sell some of it, and so just seeing some insider selling shouldn't be particularly alarming, especially with something like Stitch Fix, where the stock has just gone up a whole lot. And yeah, as far as the stock, it's gone pretty far, pretty fast. Stitch Fix is a company, for those of you who don't know, that sells a sort of subscription service, and you can get a box of clothes in the mail that's kind of tailored to your interests every so often. And so that kind of thing, right, makes sense as a pandemic play. It's like, oh, people buying clothes online. Absolutely makes sense. Now, how many clothes you need if you're not going anywhere is kind of a different question. But it on the face of it, it makes sense as sort of a pandemic play. It's also not profitable, and it's way up this year. So it is, I'll say, hard but not impossible to imagine it continuing to grow at a rate that justifies that valuation. Again, right, like that doesn't necessarily mean I think the stock is going to go down, but I have a hard time imagining it growing as much in 2021 as it grew in 2020, just because it was way up in 2020. Yeah. And then the second question here is, do you see the fundamental of a stock as the most powerful tool to look at when choosing a pick? Is it parallel with the analyst ranking or not necessarily? So, the analyst ranking is also a fundamental analysis, right? Like, analysts are, by and large, doing an analysis of the underlying company, applying some valuation multiple to it, and coming up with a target price, right? And then if the target price is way up from where the stock currently is, that's a buy. If it's way down, that's a sell. If it's somewhere pretty close, that's usually a hold. Stitch Fix is sort of an interesting case. Let me grab my back to the Investors Observer website again, because it is well above the mean target price, but still rated a buy, which happens sometimes. What that typically means is the stock has gone up super fast, right? It went up from 36 to 72, which is doubling by my count, basically in December. That just means the stock went up faster than analysts could adjust. What you'd expect to see in a case like this is, over the next couple of weeks, you'll see this target price go up, or maybe this average recommendation go down. It won't stay in this sort of weird inverted stage forever. Yeah. So Stitch Fix doubled Yeah, bottomed at about 11 and then peaked at 70 something, and it's about 60 now. Yeah, it's way up in 2020. It's, again, hard to see it repeating that performance in 2021. Doesn't mean it won't happen, just seems kind of unlikely. All right, and then yeah, fundamental versus technical really depends on your holding pattern, right? So fundamentals don't matter to day traders, okay? You don't care if they, how much cash is on the balance sheet in terms of can they keep covering their dividend for X number of quarters. If you're day trading, you don't care about that. Stitch Fix isn't profitable. You don't care about that if you're day trading. Whereas, yeah, technicals don't matter to Warren Buffett. Does Warren Buffett care about Bollinger Bands or candlesticks? He doesn't, right? Like, he buys things based on value and he's willing to hold it forever. Technicals don't matter to somebody like that. So what matters to you really depends on what you're trying to accomplish. If you're trying to get in and out and make some short-term trades, then you're probably going to want to be looking at technicals a little bit more than fundamentals. The thing I will say about that conversation is if the fundamentals start to look real bad, maybe that's the sign that a sign that the technicals might follow, right? There isn't a magical point in valuation metrics where stocks start going down. Things can get real crazy before they correct. But that is a sort of a thing to be aware of, even if you're doing some pretty short-term trading. All right, and then the other two questions she had were thoughts on crypto and blockchain, the momentum pause and possible upward movement. Yeah, I'm not a big believer in crypto. It seems generally sort of like an answer that doesn't have a question. I don't understand what the point of it is. Again, this doesn't mean I think it's going to crash tomorrow. I haven't been a big believer for years now, and it's done nothing but go up. However, what hasn't happened is people haven't started using it for things other than trading, right? So people are trading. There's still a few weirdos buying things with it on the internet. But if I had a bunch of Bitcoin, I would have to Google where to go to spend it right now. That's not the promise of Bitcoin, right? The promise of Bitcoin was, oh, this will replace money. Well, it hasn't happened yet. It hasn't really even started to happen. So, yeah, I'm going to have to know where to go to spend Bitcoin to buy things before I'm going to start being a believer in Bitcoin or any of the other cryptos. And then the final question here, thoughts on how the economy in 2021 will affect the stock market or perhaps certain stocks. New to the stock market, playing the game and learning every day. So yeah, the economy is not the stock market. They're related, but not the same. I feel like 2020 should be, the A1 case for that. The economy did real bad in 2020. It started to pick up a little bit near the end, but 2020 was not a good year for the economy by really any measure. Stock market did great though. I mean, yeah, it went up and then down and then back up, but it finished with a pretty solid gain. And so what's interesting is if you had given me the economic projections for the year in January of 2020, I would not have predicted my S&P target would not have been where the year ended up. You told me every data point for the entire year would not have put the stock market where it was to end the year. And I don't think there's any analyst who would tell you that they would have predicted things turning out like that. So the stock market reflects investor thoughts about future cash flows of some companies, right? Whereas the economy is things like household budgets and small businesses that just don't show up in the stock market. And the other thing to remember about the stock market is there is generally sort of a constant flow of money into investments, right? People, those 401k deposits go in every month, and generally the deposits are larger than the withdrawals, just on the retirement side. And there's other money that's looking for a place to be invested, and so that keeps sort of keeps the market keeps some upward pressure on the market. Obviously, the market does go down, right? So it doesn't keep it from falling, but it keeps some upward pressure on the market. Whereas yeah, household budgets can get tight, right? Small businesses can close. Those things just don't really show up in the stock market. Now, when things are good for household budgets and small businesses, that shows up in the stock market. And when things are bad, it shows up in the stock market. But when you're measuring the stock market with, even an index of 500 stocks like the S&P 500, yeah, Apple and Microsoft and some of those things are going to keep on chugging. And also, people need a place to put money, and Apple and Microsoft are pretty safe. So they can go up while other things go flat or or just kind of go sideways or down even. And that's maybe a better reflection of the real economy than what the actual headline numbers do. All right, so that's all the pre-submitted questions. I've seen a bunch come in while I've been talking, so let's go through some of these. All right, so Ben asked, how many trade recommendations are there daily? That's sort of a hard question to answer. It really depends on what you're looking at. So we have 4 trades a day in the Investors Keyhole service, which are credit spreads that get emailed to you during the day to our elite subscribers. There are also portfolio trades that come out periodically, sort of based on market conditions. And then we have the featured and preferred trades that show up on the option dashboard. All of those could on some level be considered a trade recommendation, but the number one can vary a little bit, especially with the featured and preferred trades, because we try, it can be more, it can be less. We try to avoid earnings and things like that. So sometimes, depending on where we are in the cycle, the numbers go down. But yeah, there's a good number, but it's hard to put an exact number on it. And then where do we see updates to trades in the option portfolio? So options, portfolios. Updates will show up in 2 places. The first is your email, but simultaneous to that, they'll show up here. So in the case of Ben's question, where he asked specifically about this Starbucks diagonal, this sold call is expiring on Friday. We'll get an update out probably tomorrow, if not Friday morning. But yeah, this is where to look. If there's updates, they'll be here. If there are no updates, they won't be here. No updates doesn't mean anything other than no updates. You can check the website. If you're really worried about something, you can send us a ticket, and we're happy to use the help button. Send us a ticket, and we're happy to get back to you on that. All right, so James said, what do I think about bank stocks? Are they still going up after the big jump today? Let's see here. That's probably a better option. It's close. I can't see how much it went up today. Quite a bit. I again, right? Like so many of the questions I answer in these things, it depends on your time horizon. If you mean tomorrow, it's possible we'll get some kind of a pullback based on the big jump today and then the sort of really crazy political developments this afternoon. That's hard to say. But if the reason stocks were up today is right, there's some expectation for more support for the economy. More support for the economy means a healthier economy long term. Banks are, if not the plumbing of the economy, maybe sort of the plumbers of the economy anyway, in terms of, right? I mean, if you think about a bank, what does a bank do? People who have extra money put it in the bank. People who need money go to the bank and get it. The bank is collecting fees on those various, moving around of money. So if you have a hot economy and lots of money is moving around, banks are going to do well. If you have a not so great economy and money's not moving around very much, banks don't do that well. So, if you're talking about over the next several months, if it looks like we're going to get more stimulus, it looks like the economy is going to start to improve, banks will probably keep going up. If you're talking about tomorrow, my guess after a big jump typically is that things are going to pull back a little bit, but I don't know. Trying to predict what the market's going to do over the next couple months is hard enough. Trying to predict what it's going to do tomorrow is basically just guessing. Okay, so we have a question from Akamai who says, I'm a new premium member, where should I look for options trades? So premium members, the premium membership is only our stock stuff. For the option stuff, you need to be at the covered calls or the elite level. So yeah, that's where you look for the options trades is in those higher level subscriptions. So James says the intraday trade alerts on elite options plan, weekly options. They're typically the monthlies. So I mean, sometimes it will be something that expires in a month. We do the weeklies in the portfolios and some things like that a little bit more. The reason we try to stay away from them in the weeklies is, a lot of times the liquidity is less, especially on some of the smaller stocks. And it just makes it harder to find the trade. So we try to stick those to the monthlies just because they tend to be a little bit more liquid and we can get better prices and better spreads, especially because those trades tend to be a little bit further out of the money. And so you start looking at weekly options on, stocks outside of the top 10 or 15. And the 10% out of the money puts can be pretty thin and the spreads get really wide. So we try to kind of stay away from those. So CR asked, is there a place to see how many analysts are covering a specific stock? We don't currently have that information. You can see, this is not a good example. So this, right, so this chart where it has a high, a mean, and a low suggests there are at least two, right? There's a high and a low, and then the mean is in the middle. If you see just one line there, it means there's only one analyst, but beyond that, we don't really have a way to give you that number right now. And that's just because our vendor doesn't provide it to us. But we're always sort of, evaluating our data needs. It doesn't mean we won't have it in the future. It just means we don't have it right now. So, all right, we have a couple of questions here about site orientation and recorded videos. So all of these workshops have been recorded for, some amount of time. You can find them on our YouTube channel. This one's being recorded and we'll post the video tomorrow and send everybody a link to it. Going through those can be a good way to find things. We're also adding videos to our help center. So if you go to the help center and you have a question about something, that's probably not a good one. Here we go. Yeah, we're slowly adding videos to our help center in terms of how to use the website and some things like that. So that could be another place to look for some website orientation. If there's a specific thing you're interested in, that's what these workshops are for. You can hit that help button on the website, stuff like that. So Steven says, do I have any idea what happened to cause a sudden drop in biomed stocks today around 2:30? Let's take a look here. I'm just using the ETF as a proxy. That's not what I want. Where do I go to compare? So, yeah, this is about the time that the Capitol was stormed by a bunch of people trying to essentially shut down the Congress today. That's why that happened. The biotechs went down more than the broader market because they're sort of a riskier stock, and when people start to shed risk, they shed the riskiest things first. Yeah, that seems to be about that. So yeah, we don't typically, these workshops are the workshops we have. If you have questions about specific trading strategies, by all means, send us an email and we can put together some stuff and talk about specific Specific trading strategies. I've done it before. I'd be happy to do it again. But we don't have, I don't have a special carve out webinar planned for anything in particular. All right, so for elite members or other option subscribers, we have a whole options section of the website, which is available through this top navigation here and then the options dashboard. And you can go from there. Investors Keyhole can be found here. You should also be getting those in your email. So if you're not, you can go to my account and check your notification preferences. But yeah, so portfolios, morning update, investors keyhole are there. We also have the whole options screener here where you can screen through any of our 7 option strategies. All right, let's see here. All right, I have a question about Jaguar. Yeah, so the question we got is somebody bought some Jaguar, but is currently underwater. Yeah, so here's the deal. I said this a little bit earlier. I'll say it again. No one knows if the stock market, much less a stock, is going to go up or down tomorrow. Okay, it's not a thing. What our rankings try to do is capture how the stock has performed over, in this case, some time frames, right? So over the short term and the long term, this stock has been pretty bullish, right? I mean, this is, maybe this flat up thing is a little bit weird, but this sort of up and to the right is exactly what you want to see, right? That's a good stock chart. So yeah, it gets high technical scores. Analysts seem to like it. The fundamentals are good. It has a relatively low PE rating. It's making money. I don't know much about this stock in particular. But yeah, it's rated very highly. That doesn't mean it's going to go up every day for the next week or tomorrow or even be up over the next week. What it means is the short-term technicals look good, right? The chart seems healthy. It's not overextended. It's not super volatile, just going up and down like crazy. It has, sort of a discernible pattern to the way it's been going. Analysts like it, etc. Right? So that's what that means. So if you bought a stock a couple days ago and you're underwater on it, that's that happens sometimes. Really, is all I can say about that. It's not a weakness necessarily in our ranking system. It's really just kind of how the stock market works. Let me go through a few more of these. All right, so we got a question here who says somebody had 20 shares of Apple and held them for 2 weeks and then bought 10 more for a total of 30 on Monday. Can they sell 15 on Tuesday or Wednesday, or do you have to wait 3 days? There's no reason you should have to wait 3 days. There are some rules about what's called pattern day trading in terms of basically getting into and out of a position in the same day. And in certain kinds of accounts, you're allowed a limited number of those. But in terms of I've never heard of anybody having to wait 3 days to hold a stock. If you buy it, you bought it, and then you can sell it. Now, there may be some issues in terms of clearing and when your cash becomes available again. But yeah, you don't have to wait. There's no number of days you have to wait to hold a stock. There's not like a minimum holding period, unless, again, if your broker may have some specific rule about that, but that's not any sort of rule that I'm particularly familiar with. All right, so we got another question about investors' keyhole trades here. Let's go back and find one of these. All right, so these all follow basically the same format, okay? So this one is the unusual options activity. We also have them on, just news of the day, analyst upgrades and downgrades, and the insider, typically insider buying. But yeah, so typically what you have here is you have the first piece, which is what's happening. Why we're talking about this particular stock, or in this case an ETF today. And then you have the trade alert down here. So the technicals for XLF are bullish with a sideways trend, support around 29.50. Stock is trading up today at 30.61. All right, so then the trade part is this, okay? Look at the February 25-28 bull put spread for at least a 20-cent credit. So what this means is we're going to do a vertical credit spread that's going to sell the February 28 put, buy the February 25 put, and the difference between the prices of those two should be 20 cents or more. So you're going to enter this whole thing on one ticket like I was talking about earlier, sell the 28, buy the 25, net credit of 20. You may get 21 or 22 or 23, you will not get 19. You just won't get the trade in that case, and that's fine because we don't like this trade for less than 20. And then, yeah, it has a target return of 7.4% or 7.14%. That's just the 20-cent profit against the amount at risk here, which is $2.80. And the stock has to fall 8.53% to cause a problem, is the distance between the current price here at 30.61 and the sold strike here at 28. All right. So when you're looking at stocks, which technical indicator do you prefer to show whether a stock is overbought or oversold? So overbought and oversold are sort of specific things that people use. There are some, what's it, the money flow indicator. Let me go back here. Go back to the page and look at the chart again. Yeah, the chart has a whole bunch of indicators. Yeah, so there's a couple of money flow indicators here. You can also look at RSI, MF. Okay, yeah. Yeah, so things like that are indicators that some people use. If it starts to get high, it gets it toward overbought territory. The thing about overbought and oversold are kind of like valuation. There's not any sort of thing that means, like, oh, this is overbought and it's going to go back down, right? I mean, you can see things tend to go this way and then they go this way and then they come back. But that's not, yeah, it's not scientific in the sense of, maybe you want to start to lighten positions when the indicators get high, or, add to them if they get low, kind of a thing. But it's not a thing where you can say, okay, well, this is the magic number where you buy and this is the magic number where you sell. It just doesn't work like that. And then there's also, so Bollinger Bands is another, no, I clicked the wrong thing. Yeah, I mean, there's also accumulation distribution. Bollinger Bands are more of a technical thing in the sense that they take a moving average and then apply some number of standard deviations along that moving average with the idea that, the stock should stay inside 2 standard deviations by 90-some% of the time. So if it goes outside, that might be a thing that's extended. That's not typically what people talk when they talk about overbought or oversold. They're typically talking about, one of these, money flow indicators in those cases. But yeah, those are the sort of indicators to look at there. All right, so Vivian asks, 5 keys on an options trade means the lowest risk. How much, what is the percentage of getting a profit from a 5-key option trade? That's not how the keys work. So the way the keys work is we take, let's look here. Well, actually, let's go to the screener. That's a better way to show you. All right, so the way we calculate keys is we look at some things that determine, well, what do you think, what do we think makes a good option trade? And so in the case of like a covered call, what makes a good option trade is it's not very long. The amount of premium that we're getting compared to the number of strikes available, we want more premium than, the width of the strikes available, right? So, we look at something like this Spotify here. Okay, and this call brings in 10 bucks, something close to that anyway. So the call brings in 1138, and I can go look at my option chain on another monitor. And I see that Spotify for the January 15th expiration has near the money strikes that are $2.50. So this means that if I want to roll this trade, I've got a ton of options, right? Like it's got a big premium and I can roll it in $2.50 increments. Okay, that's a pretty easy thing to roll. If you're looking at options that cost $10 and you got 250 increments, where it gets real hard to roll a trade is you've got $1 in premium and you got $5 strike prices, because yeah, you're not rolling that up or down and making any money on it. If you're trying to stretch $1 across $5, that doesn't work. It's real easy to make $10 cover 250. It's real hard to make $1 cover $5. So that's the thing to look at there. So we can just reverse this and we'll see that the low keys here will be longer. Okay, some of these go out to 2022. Here's June. And then also will be just sort of less attractive on those other things we talked about also. So let's look at Barrow here. So even though this trade is the same length as the Spotify trade, that's got 207 in premium. And in January, the options on that guy are, they're at $5 strikes, right? So that's not a trade we like. Okay, so it's really not about like, what do we think is the likelihood, the fives are more defensible, right? If you have to do something with it, it's a lot easier to do that. They work a little bit differently for the vertical spreads. We'll look at one of those real quick before we wrap up here. For the vertical spreads, we're not really concerned about playing defense. What we're concerned about is things like the downside protection, right? How far out of the money it is, and then that difference, how far out of the money it is, how long it is, things like that. So, a 5 here, again, right? This is going to be a little over a week. It's not quite 1% out of the money. It's about 0.5% out of the money. It's got a good assigned return rate, so the risk-reward ratio is pretty high. Whereas if I go and just sort for the low keys, I'm going to again get trades that are a lot longer, trades that are, some of them are further out of the money, but that is because there's so much longer way. So there's 2023, here's July, here's 2022, here's June, 22, 22, 23. So yeah, that's really the difference. Is these trades are right. The low keys are just less attractive, and it's also doesn't include any opinion about the direction of the stock. Okay, so if you want to know if if our system likes the stock, our system likes the stock if it has a high overall score. The key ratings can be different. You can have a low overall score and a high key rating. You can have a high key rating and a low overall score. Those things are not connected at all. So that's another thing to keep in mind. All right, so with that, it is after 5. I'm going to go ahead and wrap up here. Like I said, this session was recorded. We'll send out a recording tomorrow. We'll also have a link to sign up for the next workshop, which will be in 3 weeks from today, which is the 27th of January. If you have any questions for us before that, you can call us at our phone number, which is located on the website, between 8 and 5 East Coast time, or hit this help button and send us a message there. So with that, thank you all for coming, and yeah, thank you for subscribing to Investors Observer.